All right, we're going to go ahead and get started. If you haven't found your seat, we'll help you find your seat, but just wanted to start real quickly and just say good morning to all of you. It's still morning time. Thank you all so much for being here with us today. Just wanted to do a quick welcome, and thank you all for joining us for our inaugural RGV Economic Outlook 2026. This is an event that is part of several initiatives that we'll be having at the Rio Grande Valley Business Journal. But I wanted to get started real quickly. Today's event would not be possible without the generous support of a lot of you that are here, a lot of sponsors that are here. So I want to take the time to acknowledge all our sponsors at this time. At the gold level sponsorship, we have BIC Realty, DHR Health, Lone Star National Bank, Greater Brownsville EDC, CIL Capital, Cameron County RMA, ERO Architects, Hidalgo County Appraisal District, MEG Engineers, Open EB5, South Texas Health System, Rio Grande LNG, Vantage Bank, Edinburgh EDC, AEP Texas, Supreme Engineering, City of McAllen, Pathfinder Public Affairs, and Greater State Bank. Thank you. At the silver level, we have Blue Parrot Software. We have Harlingen EDC, Texas National Bank, Weslaco EDC, AT&T, Rhodes Enterprises, Hakes Brothers, Capital Insiders, Rio Grande Valley Builders Association, SVN Hannah Solutions, South Texas Builders Association, Guaranga Dream Ranch, Domain Development, Max Claims, and Valley Land and Title. Let's give them all a round of applause, please, for their sponsorship. In a moment, I will have Mayor Omar Ochoa come up here and do the formal welcome to Edinburgh. But before that, I do want to conduct just a little bit of business. After all, this is a business luncheon, right? We've got a quick video to show you all about our Rio Grande Valley Business Journal. And it will give you a sense of who we are and a big part of the reason why we've invited all of you to be here with us this morning.
Hi, I'm Ramiro Garza Jr., founder and publisher of the Rio Grande Valley Business Journal. I started this publication because I believe the Valley deserves its own voice in business, one that tells our story, our growth, and our connection to Mexico and the world. Every day, our team of journalists are covering the people, companies, and ideas shaping our future.
And I'm Naxieli Lopez Puente, your managing editor. Every day, our newsroom connects the dots, adds context, and highlights the people shaping this dynamic region.
We created this publication to give the Valley a stronger voice, one that celebrates innovation, investment, and the growth connecting our communities. And now, I want to personally invite you to be a part of it. You can become a premium subscriber and get unlimited access to every story we publish, plus full use of our data center, packed with local economic insights, business trends, and investment data you won't find anywhere else. Or consider being an advertiser. We have several different ways to get your message to the business community and the public marketplace. Let us help you design a campaign of ads, video, and graphics to let customers and investors see the value in your business and its products and services.
And they'll find your message in their inbox every morning with our popular weekly news brief and Sunday morning wrap-up. The region's top news stories are delivered every day in a convenient and easily readable form, which is also shareable. Sign up for the news brief on our website.
Your support through a subscription or advertising keeps the reporting alive and local.
Subscribe today at rgvbusinessjournal.com to unlock exclusive stories, data, and insights.
The Rio Grande Valley is no longer the edge of Texas. It's at the center of its future. And together, we're proving that the Valley's best days are still ahead.
Thank you. Now let me do what marketers like to call the ask, right? You got the ask. So there's some QR codes laminated on your table that you'll find, and that's just so that you can have access to our site. If you haven't been to our site, you can just scan it. You'll have access to our site. You could either subscribe or inquire, or actually send us tips, for stories that you may have that are happening. There's also the ability for you to sign up for our daily briefing. For those of you that are subscribers right now, you get a daily briefing. You get an email. I think it's right at 6 o'clock in the morning, and it gives you insights as to the day's business stories. In your program that you also see in the table, there's some, if you turn it around, there's some QR codes there as well. We just launched our app. So this is not just something available on a website. You have the ability to download. We've already gotten approved by Apple and Samsung through Android. So whichever phone you have, you're able to download the app and have access to all the stories that are happening here in the Rio Grande Valley. So now it's my privilege to introduce you to Edinburg Mayor Omar Ochoa to do the official welcome here to this gathering. Mayor Ochoa was elected in November 2025 to lead the city's next era of progress and growth. He's a native of Edinburg and is committed to a clear vision focused on economic expansion, securing long-term infrastructure, and ensuring governmental accountability and transparency. Mayor Ochoa previously served as Edinburgh City Attorney for nearly 6 years, being the chief legal advisor to the City of Edinburgh. He's a nationally recognized trial lawyer, a certified public accountant, a former federal law clerk, and the first Latino editor-in-chief at the Texas Law Review at UT Law. He is dedicated to using his legal and financial expertise to strengthen Edinburgh's infrastructure and attract high-quality jobs for our community. Please help me welcome to the stage Edinburgh Mayor Omar Ochoa.
Well, I am very honored to follow former Mayor Ramiro Garza both on this stage and in this job. Thank you. Yes, I think that deserves a round of applause. Thank you for all your years of service, sir. So I want to welcome everybody here to the City of Edinburgh for this amazing event. I look around and I see business leaders, community leaders, elected officials. This is a very impressive room to be in, but this is an important topic of discussion to have, and we're honored that the City of Edinburgh is chosen the host city, right, to be able to do this. The South Texas miracle that has been going on for decades is a real thing. And this is the story that we need to be telling over and over again to anyone who will listen, locally, statewide, nationally, and internationally. And I personally am so thrilled that we now have a publication that is dedicated to telling just this story. Over the last several decades, right, we've seen up and downs in our national economy from all different kinds of things. Here in the Rio Grande Valley, what we've experienced in the last 30 plus years has been periods of intense boom and periods of pretty good growth, right? We never really have had seen that big slowdown that has hit other parts of the country. So we are blessed to be in the position that we are in. But with all of that comes the responsibility for us to continue to invest in our workforce, to continue to invest in infrastructure, and make sure that we have the resources we need to continue this economic miracle. So thank you again to the Business Journal for putting this on together. Thank you, Mayor Ramiro Garza, for spearheading this initiative. And thank you so much to the panelists who are here today to share your wisdom and to help us amplify and tell this story of the economic miracle of South Texas. Please enjoy.
Thank you, Mayor. And I do see that we do have quite a few, of course, business leaders, as Mayor Ochoa mentioned, but we also have quite a few elected officials. And so that I don't get into trouble with anyone, I'm going to ask all elected officials that are here, please stand so you can be recognized for your time of being here and your service to our community. If you're an elected official, please rise and let's give them a hand, please, for all that they do. We have quite a few. Don't be shy. If not, I'll point you out. You see them out there. Thank you. Thank you, ladies and gentlemen, you elected officials. Thank you for all you do. I know firsthand the time and sacrifice it takes. So just wanted to recognize and acknowledge you for being here. At this time, we're very pleased to have with us today our keynote speaker. We're going to get right into it. Dr. Pia Orrenius, she's here with us today. She's a vice president and senior economist at the Federal Reserve Bank of Dallas. Pia's a labor economist at the Federal Reserve Bank of Dallas, working on regional economic growth and demographic change. She is affiliated with several academic institutions and served as senior economist on the Council of Economic Advisors during the President George W. Bush administration, where she advised them on labor, health, and immigration issues. She holds a PhD in economics from UCLA and bachelor's degrees in economics and Spanish from the University of Illinois at Urbana-Champaign. Please help me welcome Dr. Pia Orrenius to the stage.
No, thank you so much. It's so nice to be here. Thanks for inviting me. It's a pleasure to be in the Valley. I always enjoy it. Well, let's get started. I thought we'd talk about a little bit about what kind of a year we had last year, and we're calling it the twists and turns of 2025. And you can see the roller coaster theme. You can appreciate that. And then we'll talk a little bit about the 2026 economic outlook. So the views obviously are my own. I don't speak for the Federal Reserve, but that's okay. As long as they send me the paycheck, we're all good, right? Okay, so getting ready to ride this roller coaster, I thought we'd revisit a little bit of what we saw in 2025. So Texas economy actually slowed in 2025. Output growth was below average, but really the surprising thing when we got the data in and we've put in all the early revisions into the job growth was that employment growth was near zero in Texas last year. And so this has been kind of a very surprising finding, and we'll talk about this more during the presentation. So what are some of the reasons for the slowdown in the economy? Is really higher tariffs, falling immigration, federal government cutbacks, and really widespread uncertainty about economic and fiscal policy and trade policy, certainly. Texas, in particular, also contended with job losses that were not necessarily cyclical. They're more structural. It's more about these industries becoming more efficient over time, more capital intensive. So we continue to have job losses in energy and also in high tech. And the thing that we're really watching is what we're having statewide, I'm pretty sure, is a downturn in residential construction. So more single family than multifamily, but single family construction is down significantly. So the outlook, given this background, really 2025 was not as great as we thought it would be last year. But we think that 2026 will really see a pickup in growth. And I think just reading the Business Journal, which I'm really enjoying reading, I think you can see some of the signs of the pickup that's underway. So some of the reasons are certainly the momentum in AI investment. Data center construction we expect will carry forward. I saw you guys are dealing with some of that as well. Fiscal policy is really expected to add to growth this year. This is mostly the tax changes that are coming out of the One Big Beautiful Bill Act, which we expect are going to spur the incentives for companies to do a lot of capital expenditures and investments just because they get those bonus depreciations. We're also seeing, of course, that easier financial conditions, and that's kind of jargon for like high stock market valuations and the wealth effect that comes from stock market valuations when people have money in the market. So that does translate into some of the consumption. Of course, it also translates into some of the K-shaped economy that we've been talking about in the media. That there's some people that are really benefiting from this and then other people that are left out. But that's another boost. And then deregulation, of course, we're not seeing that in all industries, but certainly certain industries are seeing boosts from deregulation momentum in this administration. And in Texas, we have the World Cup. So one of our contacts said, every World Cup game is like a Super Bowl. And I think at least in North Texas, we're getting 9. I'm not sure how many Houston is getting, but this is going to be a significant boost. it's temporary, but it'll still be fun to host those World Cup games this year. So as we look into 2026, what are the headwinds? Really, they're going to continue to be some of the same headwinds that we saw last year. So labor supply constraints from continuing immigration crackdowns. And then also, we're not expecting the residential housing market to turn around really too quickly. I mean, it might be in the second half of 26, it might not be till 27. And this is really more about single family than it is about multifamily. There is continued pressure on oil prices, so we're not really expecting those to turn around too much. And then, of course, we're watching the cuts to safety net programs. And last but not least, and as you guys are, more familiar with than really anyone else in the state, is really that we're watching the outcome of the USMCA review. So this is our trade agreement with Mexico and Canada. It's really important for Texas. Texas has benefited from the USMCA. We have a lot of companies, especially manufacturers, that import and export under the the agreement. And so what happens under the USMCA review is going to be really important for Texas. Okay, let me show you some of these data. I hope you're ready for some charts. So first is really the initial point that I made, that we had a very surprising year last year in the sense that we grew as an economy, but we did not really add jobs in the state, which is very unusual. So you can see kind of by that last bar there, Texas is in blue. So 0.1% job growth last year. That's about 10,000 jobs for the whole state. And so that's very little for us. We're usually, we're used to growing 200,000, 300,000 jobs in a year. So that's surprising growth. And right now, again, it's different from the official number, which is a little bit higher because we early benchmarked the data at the Dallas Fed. So, but in March, you'll see the Texas Workforce Commission will be releasing the revised data for last year, so they should match up. And the other interesting thing is, if you follow the U.S. employment data, that was coming in at 0.4% just last week. It came in, we got the new data, they incorporated some of their revisions, and it's 0.1 now. So we really had essentially very, very little job growth in Texas and in the nation last year. Here, just looking locally and really looking across the metropolitan areas in Texas, you can see that Houston and Dallas and San Antonio all had negative job growth last year. So basically flat in Houston and Dallas. I think San Antonio is experiencing job losses, especially in hospitality, leisure and hospitality, so restaurants and hotels in particular. We've seen a decline in tourism, especially international visitors. And I think that's affecting San Antonio somewhat. And then, of course, Austin, despite kind of, some of the downsizing in these high-tech companies that's been continuing for years, they still had an okay year, at least compared to the rest of the metros. And here in the valley, between McAllen and Brownsville, there was a little bit of growth. It was higher than the state average, and so we're generating some jobs on average, but it's much below what y'all are used to seeing. Okay, but the weird thing is, so we didn't have much job growth, but we had GDP growth. So this is GDP growth. This is the value of economic output that the economy generates in a year. And so last year, we have data through third quarter for Texas and for the U.S. It's about 2.5%. That's really good for the U.S. For us, we're used to growing faster than that, but it's still kind of decent growth. So this means we had a lot of productivity growth last year, right? Because we didn't add really any jobs, but we had healthy output growth. That means we have high labor productivity. And so that high labor productivity is suppressing some of the labor demand. So we've really seen kind of this low hire, low fire economy where we are producing more with less. So productivity growth is a good thing unless, you're trying to get your kids, graduated from college and into a job and not moving back into your house. I don't know if that's... So some of us are dealing with that. But yes, so the low hire, low fire labor market, it's interesting when you take, actually the last time that we had this situation in Texas where we had decent output growth and no job growth was the jobless recovery in 2002, 2003 after the dot-com bust. I don't know if there's, you guys are a pretty young crowd, so, but if you remember, I remember it well, being, especially up in North Texas, we lost a lot of jobs after the dot-com bust, and it took us about 2 to 3 years to come back from that. Okay, the last really overview indicator on the labor market is that I wanted to show you is the unemployment rate. So this is another reason that, you know, we're kind of saying low hire, low fire is kind of how we're characterizing the labor market, because the unemployment rate hasn't really changed much. So at statewide at least. So that blue line there is Texas unemployment rate. The headline rate is 4.3%. That's about just a little bit more than it was a year ago. So that's still a very low rate for the state as a whole. We did see an increase here in the Valley. We saw a bigger increase in Brownsville and some in McAllen. So that's, you know, I can look into more reasons why we saw especially kind of a bigger increase in Brownsville. It may also have to do with labor force participation. When the, you know, more people are looking, the unemployment also goes up. But anyway, also if you see the top line is a broader measure of unemployment called the U6, and that measures, it incorporates underemployment, so people who want to work full-time but can't find a full-time job. It also incorporates people who have been discouraged and left the labor market, stopped looking for a job because they couldn't find one. So that's been also going up. So there's a few signs here and there of some slack developing in the labor market, but that headline number is still low. So this is kind of, again, where we're watching things, we're cautious, but you know, we're thinking this is more consistent with a stabilizing labor market than it is with a worsening labor market. I wanted to just point out that before I show you the data, you know, one of the reasons, so we're so used to growing, and the mayor mentioned this, we're used in Texas growing faster than the nation, considerably faster, and of course here in the Valley also, especially the last 10 years or so, it's just been a bit of a boom. And so we're very accustomed to this, what we call like a growth premium that we're lucky to have in Texas. But the reason that we're able to sustain the growth premium is because we attract a lot of immigrants and migrants from other states. So people moving from California and New York, people moving from other countries, you know, both high-skilled, low-skilled, all kinds of workers, kind of filling in those gaps. Because the truth is, in this region, we grow faster than we're able, you know, we create more jobs usually than we're able to fill with people born here. So this, when we have a slowdown in migration, both domestic migration, as you can see here, and international migration, you're gonna have to have a slowdown in job growth. And that's part of what happened last year. So here you can kind of see we had these, this is both international and domestic migration to Texas. These are the total stacked bars. You can just see we had really historic record immigration in 2022, 23, and 24. Then that collapsed to about half in 2025 and is projected to collapse, you know, more than 50% into 2026. So this is kind of what we're looking at. This is, and you can see the dark portion of the bar is domestic migration. So we hear a lot on the news about international immigration and all the restrictions that are being placed there. We hear less about domestic migration. So that's another big engine for us in Texas. And so that's also shrinking. So this is why, you know, looking forward, you know, you have to wonder, is there going to be a new normal in the labor market? If we're going to be living in Texas, we have a lot of growth. You know, how is the decline in migration to our state going to affect our ability to grow? We can skip this one. It's really the similar data that just shows the slowdown in domestic migration to Texas. Also other states like Florida, which normally are the ones where, you know, Texas and Florida are the ones who get the most migrants from other states. Let's look at construction and real estate. And I wanted to start with a chart of kind of what sectors are growing. So we talked about, okay, we're not really growing jobs, but some sectors are, right? And others are not. So some industries are growing. And that was kind of interesting too, because we looked into the data for last year. And this is really the December is the last month of data that we have right now. And so looking last year how we grew and what industries grew, and it was similar for the Rio Grande Valley and for Texas, is really in construction. Of course, RGV you guys had more, other industries grow as well. You had some growth in government, you had some growth in leisure and hospitality and manufacturing. And so there's a little bit more of volatility in job growth here by industry, but in the state as a whole, where we had our best growth and generated the most jobs, paradoxically, is construction. And I just told you it's not residential construction, so it's something else. And I think you guys are living it here too. So here's just the construction activity in Texas as a whole. You can see that orange line is residential, okay? So it's not apartments and it's not single-family homes that are growing or that grew last year. So what is growing? Well, non-residential is actually a category that includes manufacturing plants, it includes warehouses, it includes, do you guys want to fill in the gap? Do you know what else is in this? Office, well, that's not really growing that much. Data centers. I'm going to break out data centers for you here in a minute. So this is increasing quite a bit. It's been growing a lot since 2022. That huge spike there is actually those semiconductor plants that we built in Texas partly in response to the CHIPS Act. So that was that big spike. And then here's the rest of construction. This is the non-building. So here you've got your LNG plants, which you guys are apparently getting. You have one huge one, LNG, at the Port of Brownsville, and you're getting another one. So that's certainly some of those big spikes. And currently also a lot of investment in water infrastructure and related, obviously to the needs we have in the state around water infrastructure and economic growth. And also in the green line is power plants. So power plants and the need for power is not totally, it's related to the data center construction. Let me break out the data center construction so you can see exactly what it looks like for the state. So this is an index chart. And so, you can read the percent change off the axis, and it says 3,000. So we got a 3,000% increase in data center, in the value of data center construction really since late 2021. So it's a huge, it came out of nowhere. It came, it was close to zero. Now it was 11 billion last year, and this is just the construction. This is the construction activity, right? This is what it costs to build the center. It doesn't include the machines and the servers, the equipment that goes inside. So this has really been an engine in the construction sector and really for the economy as a whole. I think there's some controversy around these data centers because, for a couple of reasons. First of all, they don't generate a lot of jobs. I mean, they generate a lot of construction jobs, but, permanent jobs, you can have, $10 billion investment and create, 50 jobs permanently, or, of course, there's other spillover effects and so forth, but this is capital-intensive operations, right? So that's one thing. The other question people have is, how is this really explosion in data centers and data center investment going to affect the price of electricity, right? Because these data centers need a lot of electricity. I think I have some of that here, and we'll get to that in a minute. First, I wanted to show you, when you look, we are a very popular state for data center construction. So this is data center construction by state, so you can kind of see where we rank. So since we've really started to see a lot of growth in data center construction, we're consistently second after Virginia. So this is a popular state to come, and I don't think that's going to change. I think we're going to continue to see Texas, land to the extent that this boom in data center construction, which is related to the AI boom, to the extent that that continues, which I think everyone thinks it will, we're going to have a lot of those data centers in Texas. And before I get to the power prices, I just wanted to take 1 minute and just tell you, again, we're seeing a lot of construction activity and actually booming construction activity, but it's not in residential housing. And so I just wanted to show you why. This is house prices. And so the Case-Shiller index of single-family home prices, well, it's actually negative. So we have falling prices. I mean, the other one here is the FHFA index for Texas, but if you adjust for inflation, I think it's also negative. So we're basically seeing falling house prices in Texas right now. So good for affordability, but and hopefully, this is something that'll stabilize as well with the rest of the economy. But it's something that we're watching, and I think this is the main reason, because of the lack of affordability, the high mortgage rates is keeping people away. And in fact, frankly, also the cost of ownership of homes, right, in terms of what you're paying for insurance and property tax and so forth. All of that has gone up a lot since the pandemic. So this is kind of what's putting a lid on housing construction. Okay, so I just want to show you these electricity prices, but before we do, let me show you how demand is projected to change for power into the future. So here we are. So the solid line is, I'm showing you peak grid demand in Texas. So, think of the hottest summer day or the ice storm, Winter Storm Uri, whatever. It's the day of the year when we have peak electrical demand. And so usually we're at about 85 megawatts or gigawatts. And so that has grown a little bit, as you can see from the solid blue line, but not a ton, right? So we've been pretty stable with peak grid demand for electricity, despite all the growth that we've realized. And then on the other side of the chart, you have the ERCOT forecast for power demand, for peak grid demand. And that looks like a very different line from where we've been really the last 10 years. So what's going on? And I mean, it's certainly data centers are a part of this, but it's other things too. It's other large industrial users of electricity. It's electrification of the oil field. It's other projects. But data centers are feeding into, in a very significant way, into this forecast of, the increase in peak grid demand. I'm showing you two lines because sometimes, they have to have several forecasts. One is the unadjusted forecast, which is a much bigger line, and that the important thing to know there is that what ERCOT does is they say that every year they get a lot of applications for interconnections that are never realized. So a lot of these projects are never realized. So companies will go in, they'll say, we're building this this plant, this hydrogen plant maybe, or whatever, data center, and then it doesn't actually get financed, it doesn't get built. So they take that forecast, adjust it by about 50%, and they end up with something that's more realistic. But even with the adjusted forecast, that's a big increase in peak grid demand. So that's why there's a lot of talk around Texas about how we're going to accommodate this by generating more supply, right? We're going to need more supply for this demand for electricity. And so some of the things that you can see happening, those large data centers are actually building their own backup power supply. Or if you talk to like the semiconductor plant, those guys are building their own substations. So some of this, and then hopefully what I think regulators are hoping for is eventually some of that extra electricity generation capacity that plants have, to fall back on is actually something that we could tap for the grid on those rare days when we reach peak grid demand. And so that's kind of how they're hoping everything is going to work out, like with that and with batteries. So, and we can talk more about that if there's time later. Anyway, so this is electricity prices though, and this is pretty good. This is a good news chart. This is the one I tell people like every presentation I do, there's one chart where you say, I'm glad I live in Texas. So this is the one. And we are the blue line at the bottom. That's our inflation-adjusted electricity prices, which have done really well over time. They've actually, not gone up compared to when we started this chart. And so, the big reason for that is that we've actually been able to match changes in demand with changes in supply. So that's that's the good news story for Texas. But that's also probably a reason why we're going to get more and more and more of these data centers, because the more, if we can generate the power and keep the prices relatively low for electricity, that's more incentive for them to come here. So, but that's probably, I just won't talk about whether that's a good thing or a bad thing. I think it's probably good for growth. Then you can see in other states like Virginia, for example, they're number one in data center construction. You can see their power prices had kind of been stable or going down prior to 2024. Now they've kind of gone up. And so then you have places like California where the issues are very different. Like there you've actually had a lot of fires and they've had to reconstruct a lot of the transmission and distribution lines. So that's a different cost story than in these other states. One slide on the traditional oil and gas market, traditional energy, if you will. So I mentioned earlier, we don't think that we're going to see, a lot of upward momentum in oil prices going into 2026. And so we think that this year oil production will be pretty stable, but we definitely don't think that there's going to be significantly more drilling activity. In fact, rig counts may continue to go down, but we do have a lot of productivity growth in the oil fields. So even if the rig count goes down, you can still see production stay at these high levels where we currently are. Let me just briefly talk to you about trade and tariffs. Tariffs, and you know this because you live on the border and you're living it every day, but you're living international trade, and you know that tariffs are a tax on imports. So when you tax something, you're going to have less of it usually, okay? So the first bar here is the imports into the United States from the world, and I'm kind of not counting the first part of last year because there was a lot of front running when people tried to get in front of the tariffs that were coming, and so they imported a lot of their product before the tariffs would hit. Anyway, so if you measure imports from June through November last year, that's the most recent data we have, and you compare to the same period the prior year, you have about a 3% decline in imports, okay? And that's consistent with kind of the effect, again, that you'd expect to see from higher tariffs. Canada was hit more, about 11% decline in imports from Canada. China's imports from China down 41%. So why is the decline from China? Well, obviously, the tariffs on China were much higher than they were really on other countries, and also China retaliated. So that was another interesting story, I think, really. Economists thought when we raised all these tariffs on other countries that all of them would retaliate. But of course, it was actually very rare for a country to retaliate. Most countries sat down to negotiate. But China, I think, was an exception to that. If we look at Mexico, we actually saw a 5% increase in imports from Mexico, and we saw that last year. If you look at the Mexican economy, they did pretty well. But really, considering people were expecting Mexico to go into recession, it did not. But they had a big surge in exports. So I guess that's some good news. And in particular, where we saw the biggest rise in types of goods was in AI-related computer equipment and software. So that was up, like 27% last year. And some of that is coming, some of those electronics, servers and software is coming from Mexico. So they're feeding into the AI investment boom. So that's good. Let me skip ahead to prices. So also the concern with tariffs was how it was going to affect inflation. We are seeing that obviously, firms were passing through some of these tariff increases. What I'm showing you here in the red bar is the price growth that is anticipated by firms that were harmed by tariffs. And I'm comparing it to the blue bar, where those are firms that were not impacted by tariffs. And this is from our surveys. So we run several surveys every month. And actually, I'd love for y'all to be a part of it. Come see me after if you'd like to be in the Dallas Fed surveys. But the interesting distinction we're seeing here is that obviously firms that were impacted by tariffs had higher price growth. So they were passing on some of those tariff increases. But also that is diminishing now. So you're seeing the last two sets of bars, you're seeing that compared September to December, those tariff impacted firms are saying we were raising prices by 3.5%. Now we're going to do it by 2.7%. So again, we think that pass-through is going to be completed this year. If we don't get more tariffs, we'll start the cycle over again. Again, you see, especially among firms not affected by tariffs, that we should get slower price growth this year. So the outlook, it's pretty optimistic. Again, this is the outlook from our surveys. And so again, this is about 300 companies around Texas that answer our surveys monthly. And you can kind of see this is really where we got the roller coaster theme. If you can see, we had some highs coming into the 2025 last year. And then we had the Liberation Day tariffs, and that was a real low. And then kind of coming into the end of 2025, we again saw some optimism materialize. And I think that has a lot to do with some of that tax reform that's built into the One Big Beautiful Bill Act that's really giving a lot of money back to some companies. And also, of course, the AI boom. And so we're seeing optimism coming into 2026. So that's good. Our forecast, again, is for job growth to resume this year. So again, we had basically zero job growth last year in Texas. We're expecting it to come in around 1% this year. So that would be an improvement. That will require some migration, obviously, to the state, some migration, some immigration to continue, but also people coming off the sidelines. So Texans that are not working, coming into the labor force. If we're not going to have the kind of immigration and migration that we're used to, we're going to need, people here to increase their labor force participation and join the labor force. There are a couple things we're worried about that don't have to do with economic growth. I know some people get a little frustrated with me when I'm talking always about economic growth. They're like, well, there's other things in life. And so, yes, there's many other important things. Education and health are some of the most important things that economists a lot of times don't talk about when they visit you from the Federal Reserve. But I did want to say, one issue that we face in Texas is very, very high uninsured rates when it comes to health insurance. We're actually the worst in the United States. So we're kind of one of those rare things where we rank at the very bottom. So, and I just wanted to highlight that, with some of the cuts to Medicaid and these work requirements and other changes in kind of the health infrastructure around the population, there are forecasts out there that are predicting the uninsured rate is actually going to go up, over the next few years. So I just wanted to kind of put that out there. So let me wrap up, and hopefully we'll have time for some of your questions. So if you're feeling, like the ride is over, your roller coaster ride is over, you can lift the safety bar. Texas grew in 2025 without adding any jobs, or hardly any jobs. This hasn't happened really since the jobless recovery of 2002, 2003. So it's very unusual. But despite this, there really have been very few signs of really serious or broad-based labor market slack. So the unemployment rate has remained low. I did want to say the border region could be more vulnerable. So I know that there's a lot of growth and investment in this region, but there's also some vulnerabilities here in terms of we depend in this region on a lot of federal government spending. Whether it's, and it's not just Border Patrol, it's a lot of health and education funding that flows into this region. And so, that some of that spending has been, has been cut. And so that's certainly one thing we have to watch and see how we're going to deal with that. I think also trade. This is obviously a region that depends on trade and trade with Mexico. And so what happens with USMCA is going to be really, really important to the Valley and really to the whole border, right? Because if the USMCA gets renegotiated and we get much higher tariffs with Mexico and Canada, again, you tax something, you're going to have less of it. So, and that's going to affect activity here at the border where we do so much, where we're processing so much of this trade, whether it's, by trucking or, warehouses and logistics companies and so forth. So we're, those are things to watch, certainly. So job growth, again, it should pick up in 2026. We think, it's going to be positive. It's going to be mild. It's going to be less than what we're used to, but it should materialize. Again, productivity gains are a good thing. They are some of what, those forces that are suppressing hiring is just because we're more productive and more efficient. So that's a good story, a good way to talk about what's happening in the labor market. Less positive as, in terms of immigration is that, some of the immigration crackdown, it's limiting the labor supply, and some of it's frankly disrupting also some existing projects, I think, especially in construction, as we've seen in some of the headlines. A continuing AI boom, and again, the One Big Beautiful Bill, the tax provisions, they're going to boost activity significantly this year. And again, we talked about some of those drags on the output. And so I think just to kind of wrap up, other concerns that we're going to be watching this year really do include what we mentioned earlier, these safety net cuts, federal funding reductions, and especially in the areas of healthcare and education. And I welcome your questions if we have time. I don't know, Ramiro, where are you? Do I have time? Okay, a couple of questions.
The interest rates lowering this year?
So I don't have a forecast. I think if you look, they have these, you can go and see what the market thinks that we're going to get this year. And I think that last time I checked, they're expecting 2 cuts in the second half of the year, maybe. That was what I saw last time I checked. But yeah, I have no forecast on my own.
Just a quick question. Data centers, do we want them in our cities?
Well, so data centers, do you want billions and billions of dollars of investment? Yes, you probably do. But then what are the costs? Obviously you're going to have to make sure that the power is in place. And to a certain extent, the water, I haven't gotten the bottom line on the water demand from these data centers, because some people say these newer data centers have a closed loop water supply, and so they don't really, once they get their water supply, they're not really tapping the new water supply. They're not really increasing, they're not a drain on the water supply, if you will, but you'd have to check that. But certainly there's resource needs. They don't create a lot of jobs, but it is a lot of investment. I would think, I don't want to answer the question.
Hi, it's good to see you again. Lisa de la Garza Jr. with Titan Fuel. We are a fuel exporter to Mexico out of the port of Harlingen. And here representing the Harlingen EDC and then also a board region for Texas State Technical College. One of the things that I noticed, you said there was, the job growth is little to none last year. And a lot of it, I'm sure there's different factors. You said immigration could be a factor. There's an increase in labor productivity. In your opinion, how much is AI attributed to that as well, in terms of the lesser job growth? Serving on the Texas State Technical College, we're preparing the future workforce, and then serving on EDC, we're trying to make sure we're matching the jobs to the industries in demand. And so I'm just curious to know, AI, how much of it is a factor when we're looking at diminished job growth?
Yeah, no, that's a great question. So then there's a lot of weird information out there, so it's a good question to ask. So what we're seeing is, look, the pickup in productivity started before the AI boom started. So we actually saw, after the pandemic, after 2020, there was actually a lot of things that happened that increased productivity. And so there was a huge reallocation of labor, people working from home, people moving from certain industries to new growing industries, from old declining industries. And we saw we saw a lot of entrepreneurism, right? Everybody was starting their own business. They're stuck at home. They're like, what do I do now? So, and they got some cash from the government, so they had some startup cash and they started businesses. And so we actually saw with the business startups and really a lot of companies investing in new technology, whether it was, the Zoom software or whatever it was, but all that investment in technology and new businesses and that reallocation of labor from declining, from old sectors to new sectors actually did result in increased productivity growth. So this predates AI. Okay, so fast forward. So we're running, before the pandemic, maybe labor productivity was maybe 1.5% per year. Now it's closer to 2.5% per year. That's a big change. So, and what if AI is going to add to this? It absolutely will. So there's a lot of debate out there, and I've seen some huge numbers. But what we're starting to see is that maybe now, just maybe in the last year or two, there's beginning to be some evidence that AI is leading to some productivity gains and feeding into this top number, and also displacing some workers. And it's interesting, we've actually in our surveys run this question, and so we get back from all the surveys, all the firms that participate. So I think by now, probably 50 or 60% of firms are using generative AI in their businesses in some form or fashion. But only, 8% say that it's resulted in the displacement of some workers, and 5% said it's increased their demand for workers. So net, we get like a 3, maybe at most 3 to 5% of firms say it's resulting in the displacement of workers. Okay, so that's one set of evidence. But now from studies, we're starting to see that there's certain groups of workers where you can identify an impact. And actually what it looks like, it's recent college grads. Recent college grads we're seeing an unusual pattern there. And it looks like they're having a harder time finding jobs. They traditionally have the lowest unemployment rates of any of the, if you look at the education categories, and theirs is uncharacteristically rising. It's still the lowest, but it's rising in a way that's not consistent with any other developments. So we are seeing that. And parents who are paying college bills are telling us that as well, that their, the education prospects for or the work prospects for their kids have worsened. And parents are really nervous if you talk to them about, I want my kid to major in something that's not going to be, some occupation that's going to go away because of AI. And so there's definitely a lot of nervousness and anxiety out of there. We're seeing it more in the in the traditional college group. Now, you mentioned Texas State Technical Colleges. I mean, I think on the community college level, we're not seeing it there. I think that's really an area, a group of occupations where we're going to see AI is going to enhance the productivity of those workers. It's probably not going to displace, especially some of those technical occupations, right? We're still going to need those in healthcare as well. And so I think this is having a limited impact so far. It'll be really interesting to see how it moves forward, but definitely that's really what we're seeing so far. So I can share that. Great. Okay, thank you so much.
All right, let's give Dr. Pia Orrenius another round of applause, please, for coming down here and sharing all this wealth of information. And if y'all didn't see this, I also want to thank, any of y'all pick any of this up here? This is actual shredded money, right? From the Federal Reserve Bank. You're probably looking at me like, what do we do with this? I just think it's pretty cool, right? Like this is currency that was unfit. That's what they call it. So it's pretty neat that they brought, I think somebody's trying to figure out how they can scan this. And well, we're not done yet, ladies and gentlemen. Thank you for staying with us and being here during your luncheon. We have now a panel presentation, so I'm going to ask the panelists to make your way up here. I think we're going to just put the chairs here. We're going to switch over to do the actual panel. We have today with us 3 panelists who many of you know in the room, so I'm going to call them up here to come up here and join me. We have Joaquin Spammer. He's the owner and CEO, founder of CIL, a binational logistics company. We also have Andrea Figueroa Benten. She's a director of community relations at Next Decade Rio Grande LNG. And we have Sean Samtani, he's VP of Sales for Rhodes Enterprises, home builder here in the Rio Grande Valley. Let's give him a round of applause for joining us here today as part of this panel discussion that we're having here today. So. All right, we're gonna just go ahead and jump right in to the conversation. Everybody that's here, those of you that know them, this represents a little snapshot of what's happening in the Rio Grande Valley. You know, we've got Rhodes Enterprises, next decade, Rio Grande LNG, and then we have Joaquin Spammer involved on the industrial side. So we're just gonna have a conversation about, what is happening as it relates to their industry and plans that they see fit as we move forward. So that's a very general question. Ladies and gentlemen, whoever wants to go first, tell us about what you're seeing in your industry and what plans you see coming up for 2026.
I guess ladies first.
Ladies first.
So thank you, Ramiro, so much for the invitation. I'm Andrea Figueroa Benton, Director of Community Relations for Next Decade. We have the Rio Grande LNG project in the port of Brownsville. And so we, I knew of this project back in 2015 when I was working for the Brownsville Chamber of Commerce. Since then, I followed it, and now I've been with Next Decade for 3 years, since before construction began. So for those of you that don't know what LNG is, I know it's a very new industry to our area. It's liquefied natural gas, so it's methane gas that is used for energy, for homes, heating, cooking. And what we do is we cool it down to minus 260 degrees Fahrenheit, so it's compressed 600 times, and it makes it easier to export. So all the LNG that we will be producing will be for export globally. Our current investment is $30 billion for 5 trains. Trains is an industry term, is the liquefaction unit, so that's how projects like ours are measured in size. And so we are just filed for permitting for Train 6. And I'll tell you, we have space for more trains. So, at the moment, we have 5,500 workers at the site with our engineering, procurement, construction partner, Bechtel. And Bechtel is a premier builder of LNG facilities around the world. And we have that project right here in our backyard. 70% of those workers are local. They reside within a 100-mile radius of the site. So a lot of growth, a lot of partnerships, and so we're proud to be a part of it.
Thank you. I know a lot of us that drive down Highway 48 to Brownsville to Port Isabel could probably, testify for what you're stating. You don't recognize that area with all that's happened. Mr. Spammer, can you tell us a little bit about CIO? And
Well, we don't reach 30 billion. No, we have a development company. We have been fortunate to get a little bit of work on the industrial side. We currently have 4 job sites. We're building 630,000 square feet. We have a building in Bronzeville, 2 in Far, and 1 in McAllen that you're gonna hear pretty soon about. And it's been great. I think that we think that we have a momentum going in the valley. We see a lot of inquiries of big companies looking into settling here, what I like to call Rioplex. We have a lot of inquiries. We have been working with 50 different companies looking to settle here, and we have 30 constantly. We have 30 of them in the pipeline. So it's pretty amazing.
Great. And on the residential commercial side, I know we have Sean Samtani here with Rhodes Enterprises. Can you tell us a little bit about what's happening? And I know we saw those slides up there that is talking about Texas in general, but the Valley's a little bit different. And I know you can elaborate about that.
It definitely can. And first and foremost, pretty powerful room of people. And thank you guys for having me. And Ramiro, thank you for getting my name right. You got it right. We huddled on this right before the panel too. How do you say my name? But anywho, my name is Sean Samtani. I'm the Executive Vice President of Sales for Rhodes and Esperanza Homes. We build, for the past probably 6-7 years, about 20% of the homes in the greater RGV. So we create a lot of the housing in this region and are direct benefiters of the great work that both of you are doing. So thank you for the job creation that you are bringing to this region and for the creation of the Rioplex, amplifying the voice of this entire area. But all in all, our industry is pretty simple to calculate and forecast because we're directly correlated to population growth and job growth. Right, so we rely heavily on the creation of new people in this region. Whether you're migrating here from another part of the country or you immigrate here, that's what drives the creation of new homes. For every 3 individuals that are created in this region, we need to create shelter for that base of 3 people for the most part. So when you create 5,000 jobs, we get to sell a couple dozen homes over the last year to LNG team members, which is really helpful. But for the most part, a lot of our what's driven our growth in regards to this region has been a lot of job growth, and this is just a really great, affordable place to live. It's a very pro-business region, and we do everything we can to keep it that way.
Thank you. So, Andrea, I'm going to ask you specifically, each of you, just questions to kind of elaborate and expand on this conversation. So next decade, they at one point were valued in the region. Can you just share, if you can, why did y'all select the Rio Grande Valley? What was it about the valley that said, that's a place that we want to invest?
Yeah, sure. I wasn't with Next Decade when they chose it, but I do know that they chose it because of the location of the Port of Brownsville. It's an uncongested port compared to other ports in the Gulf Coast. So the location was just very strategic, very ideal. We also historically don't get hit by storms as bad as other areas in the Gulf Coast. So that was another factor. Also the proximity to the Permian Basin, access to abundant gas supply, and at the same time, the workforce. We knew that the Rio Grande Valley has the skilled workforce that was needed for a project like this. And so those are some of the factors.
Great, thank you. And Mr. Spammer, I'm going to shift over to you. You're out there promoting, obviously, the whole area, right, as a place to invest from an industrial standpoint. My question is, how, the Valley has evolved. I mean, you see folks here that everybody here we're like a one big family, right? Everybody knows each other now. That didn't used to be the case a long time ago, right? We were an area that was, I'd say, I don't want to say separated, but we've grown into each other. I always like to say that, each city's, right? So you can't tell what city you're in as you're driving down the valley. But things are different now. How do you see us being perceived around the world now, right? As you're out there marketing the region in terms of as a place to invest for industrial purposes?
I think that's our biggest challenge. I think we have the best region in the world to do business. The problem is that for the past 4 decades that I have been here, we haven't been able to market it correctly. So it's a matter of branding. If you go to Europe and you're pushing 48 different city names, it's going to be kind of impossible for them to recognize us as a region. So when we developed Rioplex, what we wanted is for anyone in the industrial sector outside of this region to recognize us as one single unit. And that's the way it has worked in Texas in the past. As you know, Dallas created Metroplex, El Paso created Borderplex, and we are tagging along with Rioplex. And it makes sense. If you want to sell the region, if we want to share everything, all the advantages that we have here locally, we need to do it correctly. And I think that's what is going to push us forward. I think that is coming to a reality, and we're very happy for it.
Thank you. Sean, I wanted to ask on the residential side, we have been one of the fastest growing regions, we continue to be. What do you think is driving that? Obviously, the population is growing in every city here. Some cities are doubling in population almost every 20 years. And From a residential standpoint, what are some of the things y'all do to evaluate as communities as a place to invest?
Yeah, I mean, when it comes to what's leading to a lot of this growth, I talked a little bit about the population and that steady growth. Residential home construction has been relatively flat or moderate growth every year, and that's really good. That's healthy for this region. That's what we want to see, just modest growth, no boom followed by any kind of downturn per se, right? So we see general modest growth in population. Healthy immigration reform would help to generate, to keep people here and to encourage people to move here. We'd see a lot of migration because of our house pricing and our land pricing, right? Land is the largest driver of a home price. It's a lot more affordable to create and develop a community here. And those things, those factors really are what drive home production up, along with just the general GDP factors, right? We've got a really stable, sticky buying base and economy. 33% of our buyers in all time have been in healthcare. Another large chunk of our buyers work in government or federal jobs. Whether there's a market downturn or a market spike, those jobs stay relatively stable and the same. So that sticky buying base, people always move. People will always move. People always have babies. People always get married. People move out of mom's house. Eventually, people move. And that's what leads to the creation of new households. So that sticky buying base is really what makes it a great place to be in residential home construction.
Great, thank you. Andrea, I'm going to go back to you and ask you about the workforce. Y'all, I think, currently employ, you mentioned 5,500 people. And if I'm not mistaken, a good portion of those, you would think, they're not all from Brownsville. They're from across the Rio Grande Valley. And y'all are going to continue to grow. My question is having to do with workforce. Do we have the workforce? Do y'all evaluate that to support the growth that you're looking to have?
Yes, we absolutely have it. So when we started the project, we had a commitment to have at least 35% local workforce at the site during construction and operations. Bechtel came in and said, we can do better than that. They said they knew they had workers from the Rio Grande Valley working in other projects. And since we started construction in July 2023, up to now, the average number of local workforce has been 70%. The number one source of workers has been Brownsville, and then Mission and Edinburgh, in that order. So yes, many of the workers, even now, they come from Hidalgo County, and those workers commute. But like I said, a lot of them are local. So, maybe that's why we haven't seen a lot of the housing going up, because those are people that were working in other states that are coming back to be at home with their families. I've seen it firsthand with my colleagues and some of the workers that, they share stories about how, the jobs that they were looking for were not available here before, and now they are finding that. So, and beyond construction, with the current phases, we estimate we'll have about 700 permanent jobs with an average salary of $100,000 a year. So that's great for our economy. We also have the gas supply. So the pipeline's been done by a third party, but that involves about 800 jobs during construction and 650 permanent jobs for the gas supply. And in addition to that, we filed permitting for an additional train. There's a space for 10 trains. So the possibilities are really great.
Thank you. Joaquin, I'm going to go back to you to talk about manufacturing. Obviously, this area has grown and diversified a bit, and there is some opportunities for manufacturing. Can you speak to that, what you're seeing out there, and how our region could best position itself to bring what I like to call primary employment, those jobs that we're producing a product here and exporting it outside of our area?
Yeah, but it's a combination of everything. What the federal government is doing, what the state government is doing, plus what we are all doing here in the Valley makes the perfect combination to bring manufacturing. And you're gonna hear in the next 2 weeks, one of the cities here is gonna announce a major manufacturing company moving into the area. I cannot disclose it, but I can tell you that the contract has been signed. Construction has started. It's a pretty big deal. And what happened? Back in 2025, in February the 11th, the company approached the EDC. And the EDC started working with that company a year ago. It took 1 year to land that company here in the Valley. I took engineers, specialists, architects, the EDC, the city officials, everybody got involved. Us as developers, it is a major undertaking. So one thing, the reason that I brought that up is, one thing is to sell the region, another thing is to bring the prospects over to invest, and the third thing is actually working with them to actually have them open up operations here in the Valley. And that takes a lot of effort. What I want to point is that is the combination, the perfect combination of the city, the EDC, plus the local developers, including all the experts in engineering and architecture, to land those deals. It's not an easy task. It took us a year to do it. It took us just in pre-construction costs, we probably have $500,000 invested. So that's the challenge. How do we support the private sector, all the members of the Rioplex initiative? How do we support the EDCs to actually have those companies open shop here in the Valley? That's a big challenge.
Great, thank you. Sean, I'm going to come back to you to expand a little bit about the growth that we've had. How do you see it on the residential side? Do you see it growing in the same levels? Or do you see some limits given some recent, as you know, federal enforcement actions, right, and other things that are happening out in the marketplace? Or do you see us growing at a higher level?
That's a tough one to answer. But I will first start by saying, from the voice of the Rio Grande Valley Builders Association, who I'm serving as the president of this year, we're focused on amplifying the voice of this region, right? Similar to what Rioplex is doing in marketing this region to bring businesses down, we want to be able to amplify the voice of the concerns of this region so that we can make this a better place to build, be a trade or supplier, to just work in general construction no matter what. So that in that role, yes, we are trying to improve the landscape that we're serving. Now, the kind of headwinds that we're facing in residential construction, I'd say first and foremost, population decline. That could be something that would be very, very concerning for us. And that would come in with a lack of immigration reform, right? Less migration. People have these golden handcuffs that they're wearing tied to their 3% mortgage rates, right? It's really hard to leave a house when you're paying 3% on that mortgage. So the creation of new homes is really contingent on people moving and leaving behind the home that they purchased in wonderful 2020, 2021 times, right? And then I'll add that in regards to some headwinds here, not just immigration reform and people having these where they're coming from, that home being such a benefit to stay in, but the best way to put it is I'll share my favorite example regarding affordability. Our best-selling home in 2019 was $179,000, right? And at that point in time, I'm waiting for the right? But $179,000, that's at a 4.5% interest rate. Someone to qualify for that home had to make $45,000. In 2021, that home price is now $225,000, but rates are 3%, so you still had to make $45,000. But today, right, in 2026, that same house, the same exact house that we're building on the same size lot in a similar community, similar amenities, all factors the same, is $250,000. Right? Home prices are always going up. And now that buyer has to consume a 6 to 7% interest rate payment along with the purchase price of that house. That buyer now has to make $80,000. So it takes twice as much income in that scenario almost to buy the exact same house. Plus we're factoring in they have to leave where they're coming from with those golden handcuffs and a 3% rate. So what we're doing to combat that in some ways is one, create a really above standard house, a really smart, energy efficient, great place to live. We sell a lifestyle, right? You think of Esperanza Homes, you think of home construction. We build communities. We want to sell a lifestyle. We sell a community. That's what makes us different, right? And second, we're buying affordability. It gets very expensive offering permanent buy downs in the form of a 4.99% 30-year fixed rate. That costs 4, 5, 6% depending on the day in the market, right? But ultimately, we're trying to impact the buyer's payment, because what leads people to not wanting to move is that factor of fear, right? So if we can eliminate fear, we can increase the ability to buy a home and hopefully create moving.
Great, thank you so much. So because this is a panel conversation format, we're going to open it up at this time, actually, and capitalize on having Andrea and Joaquin and Shant here on their industries. You know, any of you have any questions, I'm going to open it up at this time. I know you aren't shy. I know almost every one of you that are here. You all probably have a question or two. We promise to get everybody out of here by 1 o'clock, but we still have some time. We have a few minutes, so please ask away. We have some mics that are going around. And all right, we have a question over here to just continue the conversation here. So thank you.
Oh, okay. So we heard from the Federal Reserve, and it was just a little bit of growth for us in 2026. What are your thoughts about that? What are your thoughts about our growth potential in 2026 for each of the sectors that you represent?
Let me start. I'm too optimistic, so I'm too biased. But what I see is everything is moving very fast. So I like what I see. I think we're actually growing a lot faster. Sometimes here in the Valley we have a problem. There is a lot of economy that is not accounted for. You know that we still have a lot of people paying everything in cash, and I don't think that's accounted correctly. I'm sorry, Pia, but that's difficult to account for. And it happens the same on the Mexican side. In Mexico, they calculate that it's about 30% is an underground economy. We don't know what's happening here in the Valley. I think that's quite a bit. If we could measure that, I think we will be growing a lot faster than what the number says. That's me just saying, you know.
I mean, I'll just piggyback off that. I'd be on Wall Street if I knew the answer to that question. But frankly, I think that our keynote speaker from the Fed was spot on. Either flat to moderate growth in our industry, at least, is what I'm going to fight for, and what I expect. But something that I know about this region and the Valley is the Valley works. I mean, we have households that have multiple incomes that pitch in. We create opportunity, and frankly, I think with a lot of hustle and hard work, we could have a really good 2026, and we can grow more than forecasted, and that's what my sights are set on.
One important thing that I haven't mentioned is that next decade invested more than $400 million in deepening the Brownsville ship channel. That is to be completed. So first, the first phase of the deepening is done by us privately, and then the Port of Brownsville and the U.S. Army Corps of Engineers are working on the second phase of that deepening. So it will go from 42 to 52 feet, after that 56. So that increases the economic outlook, you know, with other industries, similar, not just LNG, but, you know, it will really make it as a location that is more marketable globally. And that deepening, at least our phase, is to be completed this year. You know, also a part of that is that we have our own turning basin in front of the project, so our vessels won't be going all the way down to the turning basin of the Port of Brownsville. Now, the first train is coming online in 2027, so we will start operations next year. 6 to 9 months after that, train 2, 6 to 9 months after, train 3, 6 to 9 months after, train 4, and then train 5 successively. And so this is, it's not just about 2026, it's for many, many years to come. Like I mentioned, we have space for 10 trains. As part of that, it's not only about the space that we take in the Port of Brownsville. We've also purchased over 4,000 acres to conserve in perpetuity. That's for wildlife habitat, for wetlands mitigation. So there's a lot of other factors and things going on. In terms of education, we already have programs in place, scholarships, internships, and then Bechtel has been working with the different educational institutions and training programs to educate our youth. And once we are in operations, we will have apprenticeship programs as well.
Thank you. And I'm going to add just real quickly to the question and plug our data center at our site. You could actually monitor it. We have a lot of cities here. We have all the sales tax on there. We have bridge crossings, bank deposits. Every month you could just go on there and download and export really through CSV or Excel or even into a presentation. And you're going to find that nothing is on the negative side. Everything's on the positive side on the local economic indicators. So, a lot of times that's where it starts, right? The movement of activity here locally. So I encourage you to visit that because it all shows in a positive trend at this time. We have another question.
Hi, good afternoon, everyone. My name's Armando Nava, and my wife and I, we've been living in Dallas for the last 6 years since I got out of the Marine Corps. I'm from the Valley originally, and we built the largest social media platform in Dallas, over 3 million followers, right? And we'd been selling real estate in Dallas for that time. And a lot of our clientele came from social media because we made Dallas attractive, right? We made it, the term sexy, right? We made it fun, exciting for the younger generation, for the youth. The problem coming back to the Valley is that there's no content like that online. The Valley isn't seen as a place to come to. It's seen as still what people assumed it was 10, 20 years ago. They don't see what's happening, like all this infrastructure, these developments that are happening. Nobody is screaming at the top of their lungs here in the Valley saying, hey, look at us. These bigger cities are screaming at the top of their lungs. They're saying, look, we got the FIFA World Cup. Look, we got Universal Studios. Look, we got this and this. But I have yet to see a video where they're talking about the $230 million lagoon development that's happening in McAllen, or Starbase expanding the $13 million development with its latest infrastructure. Nobody's talking about it. So I told my wife, I said, babe, we need to start doing videos like this to start selling the RGV to make it look a lot more appealing. So the question is for you guys is, do you guys feel like the RGV is lacking marketing efforts for attracting new residents compared to larger metropolitans?
I think we were. I don't think we are anymore. I think just what we've done with Realplex is pretty powerful. I mean, we've created a base that's recognizable as what I'm gonna guess on this. So correct me if I'm wrong, Joaquin. But 3 million people, 7 international bridges, 5 airports. Combined, I think we drive a lot of impact, and we're sending the right messages now. Now, 5, 10 years ago, maybe not so much, but with recent impact, I think that we're moving in the right direction, finding ways to amplify our voice through, in my industry, our home building association and the RGVBA, right? Look, ultimately, if I can get a message to, and guys, I'm also very optimistic, right? I lead a sales organization, yeah, that's it. But the point is just to put this in perspective, there were 2,000 homes for sale, just inventory coming into the pre-COVID times, right? Into, let's say, 2019. There was 700 homes for sale at the start of 2021. Today, there's 3,000 units on the ground. But here's the matter-of-fact point of that message is, there's never been a home that didn't sell. In the history of America, every home sells. People always move. And in regards to the social media and the content and the platforms, organizations are definitely taking larger steps towards communicating the Valley as a larger general region encompassing, Reynosa and Matamoros as, hey, 30% of every dollar generated in this region is generated by our neighbors across the border, right? So making sure that immigration reform accepts their spending and accepts their residents here and such would go a long way. Now, we can't really control the macro things, but we can definitely control the narrative in regards to your question or message about social media. And I think that we have made large strides in putting the RGV and this region on the map, just like we're doing with the RGV Business Journal as well. So.
Let me piggyback on that. United, we are better. When we work, all the cities work together, when we work with the Mexican partners, we are better. When they see us united, we are, as he said, one of the, we actually measure it, the 17th largest metropolis in the United States. If we work together, if we sell ourselves together. If we do it, everybody separately, it's gonna happen what happened the past 40, 50, 60, 70 years. So united is the key word here.
I mean, combined, so I don't think it's on, there you go. Combined, we're probably the largest land port or region in the world. So just to conceptualize that and to see the power of doing business with all this whole region combined is pretty magnificent.
Yeah, we really feel at Rio Grande LNG that the partnerships is really what have made our project so successful. We consider those that reside within a 100-mile radius of the site. So it's not just about the proximity of the Port of Brownsville, it's the entire Rio Grande Valley.
Yeah, thank you for that question. There is, obviously, we have come a long way. I agree with all the panelists than before, but there's a lot more work that needs to be done. So noted, I think that's what we're all here. In fact, that's part of the role of the journal to help not market the region, but really tell our story. You know, what is happening, where is it happening, and how is it happening? So go ahead, sir.
Mayor,
We have one last question. Go ahead.
What Dr. Pia left out is that what impacts us the most. If you're successful down here in the border area, there's three things that impact us: Mexico, Mexico, Mexico. The people have kept that in mind and put that in their profile to be able to do work will always be successful.
Absolutely. Well, let's give a hand to our panelists here for joining us today. Thank you all so much for being here. And I have just one last business matter to tend to, but just wanted to thank you all for being here. All right, as we, thank you all so much. As we wrap up here, thank you all so much for coming here tonight. As I mentioned, this afternoon, as we wrap up today, I just wanted to say that, as I mentioned it early on, this is one of the first series that we're having here at the Business Journal. But I wanted to share something with you all briefly about an upcoming regional initiative that we're calling the RGV, Best Places to Work. As we talk about economic growth, talent attraction, and competitiveness here in the Valley, the quality of our workplaces matters just as much as the number of jobs that we create. So we're launching an initiative designed to highlight employers like a lot of you that are here who are doing meaningful work to build strong, healthy, and engaging workplaces. The RGV Best Places to Work is a data-driven program built on direct employee feedback, not necessarily nominations, but it's direct employee feedback. And it's about an insight and improvement, not just a recognition. This program is being administered by Dr. Marco Garza, and I think he's here in the audience. Are you here, Marco? Can you raise your hand? There's Dr. Garza. He's with the organizational and HR development firm, and this will culminate into an annual awards event that is going to be hosted by the Rio Grande Valley Business Journal. So if you participate in this initiative, you're going to receive real feedback that you can use to strengthen culture, engagement, and retention in your business. Top performing organizations will also be publicly recognized for your efforts. We'll be officially launching it very soon with opportunities for any of you employers to participate and partner to support this event. More details, including timelines and how to get involved, will be shared in the coming weeks. And as I mentioned at the beginning, I think it was in the video, this is all about telling our story, also about the RGV workforce, what's working, where we're growing, and how employers here are investing in their people. If you care about workforce quality, culture, and the future of talent here in the Valley, this is a program to keep on your radar. This is just another one of the ideas that we have that we're working on here at the Journal. So stay in touch with us. If you have news stories, business updates, or want to reach our audience, y'all know where to find us. So just as a last reminder, if you didn't scan the QR code, you could scan it, sign up, and you'll get all our updates every day. So thank you all again for your time. Let's give a hand to the caterer, Cornerstone Cafe, also, and to our hardworking Rio Grande Valley Business Journal staff. Can y'all raise your hand? All the Business Journal staff, they're right over there. You see them? They're the ones that help put this together and highlight. So thank you all so much for being here, and y'all have a blessed day. Thank you so much.